Most people know Bitcoin. It's the name that comes up in every conversation about cryptocurrency, and for many, it's the face of the entire digital money revolution. People see it as a store of value, a kind of digital gold that you can hold, trade, or invest in, hoping it will grow over time. But Ethereum is the real engine of the crypto world, quietly powering a vast universe of innovation. While Bitcoin grabs headlines, Ethereum is the platform where developers build, experiment, and launch new ideas that could change how we use the internet. If Bitcoin is digital gold, Ethereum is a global decentralized computer. It's the backbone for everything from NFTs and digital art to complex financial apps and even entire virtual worlds. No banks, no tech giants, just code and community. Its price isn't just a number on a screen, it's a signal of confidence in the future of decentralized technology. When people buy ETH, they're betting on a new kind of internet, one that's open, transparent, and run by its users. When ETH rises, it fuels innovation. Developers get more resources, startups attract funding, and the whole ecosystem buzzes with new projects and possibilities. But when it crashes, the shockwaves ripple through the entire crypto space. Projects stall, investors panic, and confidence takes a hit, sometimes overnight. That's why everyone, from Wall Street traders to indie developers in their bedrooms, watches Ethereum's price so closely. It's more than just a number. It's a pulse check for the future of digital innovation. The stakes are massive. A major crash doesn't just hurt investors, it shakes the very foundation of the next generation internet, threatening projects and dreams built on Ethereum. So, understanding this context is absolutely key before we dive into what just happened, and why it matters for everyone, not just crypto insiders. October 2025, crypto was booming, optimism was everywhere, and investors believed the bull run would never end. But then, in a matter of hours, disaster struck, sending shockwaves through the entire financial world. A surprise 100% US tariff on all Chinese imports was announced, blindsiding markets and triggering instant panic. Within days, over $500 billion in crypto value was wiped out as traders scrambled to react to the sudden escalation in global economic tensions. Forced liquidations swept across exchanges, creating a domino effect. In just 24 hours, $9.6 billion in leveraged bets were erased, as margin calls hit traders who had borrowed heavily. The biggest casualties were Ethereum and Bitcoin, which saw their prices plummet at unprecedented speed. Spot crypto ETFs, including BlackRock's IBIT, left investors powerless. The crash unfolded outside regular stock market hours, so ETF holders could only watch as their investments tanked, unable to buy or sell until markets reopened. Ethereum, which had been trading above $4,100, crashed through key support levels. The bullish momentum that had fueled months of gains was shattered in minutes, leaving traders stunned and portfolios devastated. The crash exposed the hidden dangers of leverage and the limitations of traditional financial products in a market that never sleeps. Many investors learned the hard way that 24/7 crypto trading means risk never takes a break. Fortunes that had taken years to build vanished overnight. The euphoria of the bull market was instantly replaced by fear, regret, and disbelief as reality set in. The market's confidence was shattered and the path forward suddenly looked uncertain. Investors, once so sure of endless gains, now faced a future clouded by doubt and volatility. In crypto, fortunes can change in the blink of an eye. The events of October 2025 were a stark reminder. In this world, risk and reward are always just a heartbeat apart. After the crash, the bears took over. The mood in the market shifted almost overnight as traders who had been optimistic just days before suddenly found themselves on the defensive. The relentless selling pressure made it clear that short sellers were now in control, dictating the pace and direction of the market. Short sellers are dominating, with negative funding rates showing overwhelming pessimism. These negative rates mean that traders betting on price increases are actually paying a premium to those betting against the market, a clear sign that the majority expects further declines. Ethereum is struggling to hold above $3,030. If it falls further, $3,400 could be next. This key support level is being tested repeatedly, and each failed attempt to rally only adds to the pressure on bulls. Billions in long positions were wiped out, making traders cautious and fueling a cycle of fear. The rapid liquidations have left many hesitant to re-enter the market, worried that another sharp drop could be just around the corner. With little buying pressure, bears keep pushing prices down. The lack of confident buyers means that every small rally is quickly sold off, and the downward momentum continues almost unchecked. For a turnaround, ETH must break above $4,100 and show real strength. Only a decisive move above this resistance level, backed by strong volume, can signal that the bulls are ready to fight back and reverse the trend. Until then, the market is stuck in a bearish rut. Sideways price action and persistent selling pressure have become the new normal, leaving traders frustrated and uncertain about what comes next. Every failed rally only deepens the gloom, reinforcing the dominance of the bears and making it even harder for sentiment to recover in the near term. It's not just charts, regulatory and global fears are driving the sell-off. The SEC keeps delaying a spot Ethereum ETF, leaving investors in limbo. Trade tensions and Fed policy worries add to the uncertainty. In this climate, risky assets like Ethereum get dumped for safer bets. Bad news feeds more selling, creating a vicious cycle. Breaking out of this funk will take a major positive catalyst. For now, fear rules, and the bears thrive on investor paralysis. The market is waiting for a reason to believe again. Amid the panic, whales and institutions are quietly buying the dip. Major players like Bitmine snapped up tens of thousands of ETH, betting on long-term value. These investors see crashes as discounts, not disasters. Analysts spot signs of a classic reaccumulation phase. Spine wine staatsinnoitkiniower. One buying on nice smart money buying from not from panicked sellers. If this plays out, it could set the stage for the next big rally for the stand. Like the whale's confidence offers a counterpoint to the prevailing fear. The foundation for a comeback may already be forming. Despite the gloom, Ethereum's story isn't over. Major upgrades, Pectra and Fusaka, promise faster, cheaper, more powerful tech. The long-awaited spot ETF could unleash a flood of institutional money, just like Bitcoins did. Some analysts still predict $6,000 or even $10,000 ETH if these catalysts hit. For long-term believers, this crash could be a golden opportunity. Volatility is part of the journey for revolutionary tech. The bears may rule today, but the seeds of a comeback are already in the ground.